Okay, everybody, it's me, Gregory Mannarino. Lovely. Just lovely. And I mean that, seriously. Uh, Monday, July 19th, 2021. People, where to start? I wrote down so much stuff on my little notepad here. A lot going on. I guess we'll start off with the market. So guess what happened today? Something that clearly needs to happen, and I don't know, maybe it's the beginning, more than likely not. What am I talking about? This stock market took a hit today, and I love it. I love watching people's reactions when the market does something they're just not used to it doing. I mean, sincerely, this market has gone up and up and up and record high, record high, record high. And when it sells off, it's the big one. No, it's not the big one, people. And you can just look at a few things to know it's not the big one. Now, let me cover that real quick. All right. I explained to you this morning today's sell-off pre-market, because we saw it coming pre-market, was all about fear. You got the knee-jerk reaction of cash making its way into the debt market, which forces the yield curve lower, or the 10-year yield, more importantly. 10-year yield is the benchmark. The 10-year yield cratered. So this is a fear trade, okay? The dollar, knee-jerk higher as well. Silver took a pretty big hit today, okay? Gold, I'm going to say a little bit of a hit today. Cryptocurrencies, for the most part, took a hit, but not Dash. Dash went up almost 17% today. Again, I'm still a bull across the board with regard to cryptos. Dash, as you well know, okay, we'll talk more about that later. But understand what you're looking at, okay? When you see cash move like that, or the debt market react like that, more specifically, 10-year yield drop, that means cash is seeking safety. This fear. You understand? Knee-jerk higher in the dollar. Fear. Henceforth, stocks sell off, okay? And markets generally overreact to fear. Okay, so we had a pretty big sell-off today in the stock market. Now, crude oil, let's talk about crude oil, took a massive hit today, down almost 8%. Why? People, turn on the news if you like to get, disgusted. All they're talking about is this resurgence of this thing that's going around. Okay, you know what the thing is. Supply chain disruptions, possible economic shutdowns, all this stuff. And again, that's what's sparking fear and the sell-off across the board. I told you it would be a pan sell-off, meaning everything would sell off here. Like I said, stocks down hard, crude down hard, gold and silver down hard, most cryptocurrencies down today. I mean, we've seen this before. Now, with regard to the market, when are we going to know when it's really a time to go running for the hills? When you see an uncontrolled spike rising in the 10-year yield and stocks sell off, well, that's a problem, okay? Not today. This was fear. You understand? Okay. So I always explain this to you. You gotta watch the 10-year yield. This is why I have all this stuff, charts and graphs and everything set up for you right on my website, traderschoice.net. Okay, let's go back to crude real quick. Okay, I want to give a little credit where credit is due, but I also want to put a little perspective on this. So we know recently our friend Jim Cramer, bye. Yeah, Jim. He said, we hit a top in crude oil. Well, he kind of missed it because when he called that top, crude did go higher. However, it has dropped significantly today. Okay, fear trade, supply chain disruptions, you know that. I also explained to you that Jim could not tell you, and I said, if Jim were right about that being a top, maybe it's a short-term top, it's not the top, hold that thought. I said Jim would not tell you that the stock market would take a hit too. Boom. It's exactly what we got today. Crude oil The lifeblood of the military-industrial complex and the stock market are linked, and you can't disconnect them. They're linked together, okay? Crude oil goes higher, it props up the entire energy sector and the financial sector. Look what happened today to the energy sector and the financial sector. They both took hits on the back of crude oil falling. So again, I'm going to give Jim a little credit here. Maybe there's a short-term top here, but every single Wall Street bank has a $100 target on crude oil in the relatively short term. And with the dollar meltdown, and with trillions of dollars being created out of thin air, the Fed is being called on now to issue another, 3.5 trillion by the current brain-dead administration. It's gonna hurt the dollar, quite obviously. So again, we have this inflationary phenomenon also hitting the market as well. Anyway, I don't want this video to run too long, so let me cover a few things here. So I already spoke to you about market crashes and the debt market. This is not a crash, okay? When you have this fear trade and you have an over sell-off like today, okay, that's fear. And it's a buying opportunity in my opinion. Watch that 10-year yield like I said. Now, let's talk about this. There's a whole bunch of stuff, and I'm going to jump around. So surging home prices push home buyer sentiment to a multi-month low, almost a year low. Okay, whatever. We got a warning from Morgan Stanley on the market, okay, over, how do I say this? This thing that's going around. Well, Morgan Stanley seems to believe, or is trying to push the narrative, that this is a resurgence, it's getting worse, and possible economic shutdowns are coming, and they're warning people on that. The Fed's going to make up the slack. Don't you even worry about that happening. Of course it's going to. The Fed will be increasing asset purchases, not cutting back on anything. With regard to crude oil falling, I want to just raise this specter. Watch for a false flag. How many times have we seen this? Crude takes a dive, all of a sudden there's some kind of a refinery fire or bombing or something along those lines. So just watch out for that whole thing. So today's market really was driven again by the prospect or the threat of possible economic shutdowns, supply chain disruptions that hit crude, obviously. And it's all about, this thing that's going around that I cannot say. You understand? It's an insane asylum. Now, we also found out today, talking about economic news, the Consumer Price Index posts a massive surge in the cost of living as inflation is skyrocketing, people. And again, look, this is a phenomenon that's going to continue. And brain-dead Biden got on the bandwagon today, explaining that he, too, believes this is transitory. Now we have sitting U.S. presidents agreeing with Federal Reserve presidents and the Federal Reserve chairperson, as well as economists that are all saying, oh, this is transitory. They're always wrong. It's not transitory. You know that. Let me see. So another thing that hit oil today was this OPEC is going to increase production in August. Okay, whatever. We still did not hit the ultimate top. Okay, in my opinion, with regard to crude, this is a well-needed correction. How many of you realize that crude oil is up, 25% this year? And maybe we're due for a correction. Maybe we got it now. It's not going to last. There's no way. If that's the case, like I said, what Jim Cramer won't tell you with his buy is if he's correct, and this is the ultimate top here of crude, the market will crater. The stock market will crater. The stock market is dependent on crude oil being propped up, along with a stable 10-year yield and a weaker dollar. People, you know that. I've been explaining this to you for years, and I've kept you all on the right side of this market for years and freaking years. And I'm very, very proud to say that. Anyway, look, I don't want this video to run too long, but I covered a lot here. Very important stuff. Maybe some things you want to, pay attention to. Watch the video twice. I have no idea. But people, look, as always, I promise to keep you on top of this. You know what to look for, especially when it comes to the big one with regard to the market. Watch the 10-year yield. The 10-year yield dropping is a fear, okay? And then the stock market will follow. The real meltdown is going to happen when we get an uncontrolled spike in the 10-year yield. And that will, regardless of what the Fed's going to do, the Fed's going to try to buy more debt, but it's not going to work. Okay, we're going to get a run for the hills in the debt market. The Fed's going to print cash out of thin air, dilute the dollar, and you're going to see a sell-off in the stock market that's going to make your head spin around like The Exorcist. All right, but we are not there yet, and I will keep you on top of it. People, love you a lot. Please share the video. I'll see you in the morning.